Well, welcome everybody. Nice to have you here on a Saturday night. There's been quite a bit of volatility in the crypto market over the last week or so. So I'm going to cover that in the news. A lot of interesting stories that have to do with adoption and financial regulations that seem to be plugging their way along through our glorious Congress. I believe the bill is in the Senate at this point. So we're going to cover all that news. We've got a lot of news stories to cover tonight. I did want to point out these two sales. We've got the Ledger back to school sale where they're giving away Bitcoin, and you can get these deals directly on my landing page. So I've got a link to my landing page there. Ledger Flex, Ledger Stack, $70 Bitcoin rebate, 80, $50 on Ledger Nano X. Thank you, Doug, for that subscription. The Ledger Nano S Plus. They're only giving $10 worth of Bitcoin because they've permanently lowered the price down from $79 to $59. So great entry level price. That's still cheaper than what it was on the upgrade program. Let's jump into the news. I got a lot of stories to cover tonight. Let's see. I think we're on the first one here. Bitcoin ignores major U.S. payrolls miss to erase 113.4K surge. Well, yeah, Bitcoin was up around 113.4. I forget when exactly that was. That might have been early on Friday morning or late Thursday. I'm not sure. But yeah, the jobs report came out lower than expected, which was kind of, bad news is good news. A bad jobs report raised the odds of the Fed lowering interest rates in September. That's this month. They'll officially announce it on the 17th. They do their little powwow from the 16th and 17th, and then they'll come out and say, hey, we're going to lower it 25 basis points or 50 basis points. The low payrolls, the lower than expected payrolls raise the odds of them lowering rates for sure. Even speculation that instead of 25 basis points, it's going to be 50. There are some people out there predicting 100 basis points, but I don't hold much stock in that. Oh, Kitty's here. Okay, Kitty. Let's see. We got this camera working. Kitty's here. I was looking for Kitty. He was outside. I thought he was outside. Maybe Mommy let him back in. I don't know. And you guys can't hear me. But Kitty's back. I think maybe he was sleeping. I think he was sleeping earlier, probably in Christabel's room. All right. You go do that and let Daddy get on with the live stream. All right. All right, so where were we? Yeah, we were talking about Bitcoin's volatility. Well, the bad jobs report was supposed to be great news for lowering of rates and risk assets. Lowering of interest rates would help risk assets, which Bitcoin is still, even though some people think of it more as I can't remember the word for it. Like gold. Yeah, it's like one of those. But Bitcoin did go down. Now, I don't know if it was directly related to that. I mean, it should have gone up, conceivably, probably kept going. But maybe that jump up to 113 was an anticipatory run up, and then the news broke, and then there was a bit of a sell-off, or it was just normal market fluctuations, chart fluctuations as we see. But yeah, Bitcoin disappoints with jobs data. Price action gives up all its gains, while gold goes on to hit another all-time high. Gold's been crazy this week. Let's talk about Ethereum. Drew was in early asking about Ethereum. Now, this is an article about the Ethereum ETF outflows. U.S.-based spot Ether exchange-traded funds have posted 4 consecutive days of net outflows during the shortened trading week due to U.S. Labor Day. The week of outflows comes strong after a strong August spot for Ether ETFs, which recorded $3.87 billion in net inflows, while Bitcoin ETFs posted 751 million in outflows for the month, according to Farside. Friday alone saw Ether ETF shed 446.8 million, bringing total net outflows over the 4 days to 787.6 million. Meanwhile, Bitcoin recorded 250.3 million in net inflows during the same period. Kind of the opposite of what we were seeing a couple weeks ago, where Bitcoin was recording outflows and Ethereum was recording inflows. So traders are eyeing the ETH inflows. Of course, we're talking here about Ethereum ETFs, exchange traded funds, and that's not really direct spot market Ethereum pricing or markets. But overall, Ethereum predictions remain high despite recent outflows. Ether advocates remain bullish. On Wednesday, BitMine chairman Tom Lee reaffirmed his prediction that ETH will reach 60,000 in the long term on the Medici Presents Level Up podcast. Lee said Wall Street's interest in ETH might become a 1971 moment, which could propel the asset higher. Of course, 1971 was the year that Nixon took the U.S. off the gold standard, and now U.S. dollars are basically just based on the true faith in and trust in the U.S. government and a little bit of oil. They made a deal with oil, but that's starting to fall apart too. The multipolar world is coming into play here. There was a big meeting in China this week. All of the Eurasian countries were there. China, Russia, and India, their presidents were all in China for this big celebration. And they're talking about doing their own settlements of in yuan, digital yuan, and trading oil between each other. So the petrodollar is on its way out. So anyway, we were talking about 71 here. That was an explosion in the price of gold. I think before he did that in 1971, gold was like pegged at $35. Well, I may be wrong about $35 an ounce may have been the Depression era price. But I can't remember. But anyway, the price of gold has exploded since then, and the gold ETF up to that point was the biggest ETF ever. And then Bitcoin came along with the Bitcoin ETF and overshadowed gold. But here we are. Gold is now taken off to new highs. We're talking about Ethereum, though, here. BitMine, the largest Ether treasury company, holds approximately 8.04 billion in Ethereum, according to Strategic ETH Reserve data. Overall, Ether treasury companies now hold 2.97% of the total supply, valued at 15.49 billion at the time of publication. So Tom Lee, I hate to disappoint you, Drew, but Tom Lee's prediction for Ethereum is, of course, going to be bullish. His company is one of the largest Ethereum treasury companies. That's kind of like asking Michael Saylor if he thinks the price of Bitcoin is going to go up, right? But anyway, I did want to do one little story on Ethereum there. And now this story here, I referred to this earlier when we were talking about my previous video and the news last week about whether or not Bitcoin is peaking here in 2025 based on the 4-year cycle. Bitcoin Analyst Plan C says there is no reason for Bitcoin to reach a cycle high this year except for a psychological self-fulfilling prophecy. Well, markets are mostly psychological, so we'll see about that. But his analysis says anyone who thinks Bitcoin has to peak in Q4 of this year does not understand statistics or probability. From a statistical and probability standpoint, it's equivalent to flipping a coin and getting tails 3 times in a row, then betting all your money on that fourth flip that it must be tails. Plan C said, explaining that relying on 3 previous halving cycles doesn't provide enough statistically significant data. No fundamental reason for Bitcoin to peak in quarter four. So he's throwing out. The analyst also argued that the halving cycle is no longer relevant to Bitcoin following recent debate in the industry over its relevance, especially with the rise of Bitcoin treasury companies and significant inflows into US-based spot Bitcoin ETFs. Well, there you have it. Another analysis of the Bitcoin bull cycle saying it could be. There's no reason to think it has to be over in 2025 based on the 4-year cycle, which he's saying no longer holds. All right. I did want to bring this up. Major giants, banking giants now forecast at least 2 interest rate cuts in 2025. Interest rate cuts are a bullish catalyst for crypto prices as investors increase their risk appetite during times of credit expansion. Several financial institutions and market analysts are now projecting the U.S. Federal Reserve, the country's central bank, will slash interest rates from the current target of 4.25 through 4.5% at least twice in 2025. The banking forecast followed a weak August jobs report, as we talked about earlier, which saw only 22,000 jobs added for the month versus expectations of about 75,000. Analysts at Bank of America, a banking financial service company, reversed their long-held stance of no rate cuts in 2025 and are now projecting 2 basis points, 25 basis point cuts, one in September and another in December. So yeah, that's a fairly conservative estimate. As I mentioned, there are people predicting 50 basis points this month, and some even speculating at 100 basis points. I doubt that. And then maybe another one in December. So we could see 75 basis points before the end of the year. Economists at investing banking firm Goldman Sachs are projecting 3 to 25 basis points cuts in 2025, September, October, and November. So the chances of rate cuts are going up, even with the stuffy conservative bankers. And then I did want to give you an update on the crypto bill that's slowly making its way through the House and Senate. I believe we're in the Senate right now, going back and forth. The Senate has added a provision in its crypto bill confirming that tokenized stocks remain securities, preserving their fit within existing financial frameworks. What that means is that there are a lot of blockchain firms out there that are in the business of tokenizing stocks. And so they want to take a stock and put it on the blockchain and allow people to trade it on the blockchain. But they want to ensure that that price is pegged directly to the stock price as well. And so those assets should be treated as securities since they directly represent stocks, even though they're on the blockchain. The new clause would ensure that stocks and other securities remain classified as securities when tokenized on a blockchain, avoiding potential confusion over whether they should fall under a commodities regulation. The distinction is important for digital asset firms working on tokenization. We want to see this on the president's desk before the end of the year. Wyoming Senator Cynthia Lummis, a lead sponsor of the legislation, said in an interview with CNBC. The Senate's bill, dubbed the Responsible Financial Innovation Act of 2025, clarifies when digital assets should be overseen by the Securities and Exchange Commission versus the Commodity Futures Trading Commission. They talked a little bit in here about there have been efforts to pair while the draft has yet to win Democratic backing, Lummis said bipartisan negotiations are in progress. There have been efforts to pair Democrats and Republicans on certain sub-issues within the bill, she noted, hoping to build a cross-party momentum. So long story short, the Democrats and the Republicans have not yet come to terms on this bill. They're going to need to in order to get this thing passed. In stablecoin news, Stripe and Paradigm, in conjunction with each other, have unveiled Tempo as blockchain race for high-speed stablecoin payments heats up. The chain's stable-first design aims to handle global payouts, microtransactions, remittances, and AI agentic payments, Stripe CEO Patrick Colson said. Stripe and Paradigm unveiled Tempo, their joint blockchain designed for high-throughput payments. That's already in private test mode. Visa, Deutsche Bank, Shopify, Nubank, OpenAI, and Revolt are among companies participating in the design. Tempo joins a growing roster of stablecoin-focused blockchains competing to disrupt cross-border payment flows. And if you don't know what Stripe is that company that allows people to accept payments on their phone through Apple Pay. You know, when you're out there, today I was at the farmer's market and used my phone to buy some fresh fruit. So Stripe is big. And so Stripe getting into the stablecoin game is a big thing. And then I've got all these stories linked down below. I've got this other story about the Stripe stablecoin partnership and this also brings up Fireblocks. I think I heard about Fireblocks on the at the Solana Accelerate in New York earlier this year. I believe that's a Solana protocol. I could be completely off on that. But we've got blockchain infrastructure provider Fireblocks announced a global stablecoin payment network focused on compliance and connectivity, along with Tempo, as we mentioned earlier. You might want to check all these out. Let's see. Oh, this is kind of an interesting story. Venus Protocol recovers users 13.5 million stolen in a phishing attack. Victim Quan Sun praised Venus and partners after they were able to recover 13.5 million, calling it a battle we actually won through joint efforts. So let's see. I wanted to get into the heart of this. Venus revealed that the attackers used a malicious Zoom client to trick the victim into granting delegated control over the account. This allowed the perpetrators to borrow and redeem on the victim's behalf, enabling them to drain millions in stablecoins and wrapped assets. The protocol's security partners, HEXAT and Hypernative, flagged the suspicious transaction within minutes, leading to the decision to pause the protocol. According to Venus, the recovery process unfolded in less than 12 hours. Quan Sun thanked the teams behind the recovery. What could have been a total disaster turned into a battle we actually won, thanks to an incredible group of teams. Now, this is another interesting story. I think I talked about this in my Tangent video. There's a lot of security firms. Blockaid. Yeah, Blockaid is a company that is doing on-chain security. And then those security firms we mentioned in the article just now that are detecting malicious transactions. Now, blockchain does front runs transactions and warns users before they approve transactions. And Blockaid is being built into a lot of hardware wallet protocols like Tangent, Ledger. I know those two for sure. There are a couple other hardware wallets out there. I saw an article, or I watched a video today from CoinGecko where they talked about the difference between a hardware wallet and a cold wallet. I usually use those terms interchangeably, but they said the difference is basically how you use the wallet, whether or not you connect it to DeFi. A cold wallet would be you're only using it to store crypto and make occasional transfers, and you never interact with DeFi, whereas a hardware wallet can interact with DeFi. But more and more people are using their hardware wallets to interact with DeFi, and the security is getting much better. So we're going to be seeing more and more of this as time goes on. Let's see here. Also, Tether is investing in gold. Tether has accumulated $8.7 billion in physical gold and has a gold-backed cryptocurrency with a $1.4 billion market cap. Stablecoin issuer Tether, the creator of US dollar Tether, has begun discussions with mining and investment groups about deploying capital across the gold supply chain, according to the Financial Times. The move would further diversify Tether's portfolio risk. Tether issues their stablecoin into the system, but they have to back it with real assets like Bitcoin, U.S. treasuries, and now gold. Tether has been exploring deploying capital across several sectors in the gold business, including gold mining, refining, trading, and royalty companies. The company has accumulated $8.7 billion worth of physical gold, which it has stored in a vault in Zurich, Switzerland. The reserves back Tether Gold, XAUT, interesting, the firm's gold peg stablecoin with a market capitalization of about 1.4 billion. What else we got? I got a bunch of stuff for you guys tonight. Last one. Oh yeah, Nasdaq approves Sol Strategies list for next week. Sol Strategies is one of the largest Sol treasury companies. On Friday, Sol Strategies said it would be listing common shares on the Nasdaq Global Select Market starting on September 9th under the ticker symbol STKE. The listing will end of the company's shares trading on the over-the-counter venture market while maintaining trading activity on the Canadian Securities Exchange. This listing provides our shareholders with enhanced liquidity while giving us access to deeper capital markets as we continue scaling our validator operations and expanding our ecosystem investments. So Sol Strategies is kind of a company that helps people stake their Sol because Sol is a stakeable cryptocurrency. We're talking about Solana here, if you don't know.